Greetings, this is Dwayne, CFRN. I'm going to go over some of the concierge trade alerts from the past week. Today is the 3rd day of December 2016. It is a Saturday, but I wanted to take a few moments to just show you the power of both the concierge trade alerts as well as the weekly trading zones. Here's the Sunday night Globex Open. Last Sunday night, November the 27th. This green candle was Friday's close. This red candle was the Sunday night open. We opened right at a weekly trading zone. And this is a pattern that we see repeat again and again and again. As we break below a zone, price pulls back to the zone for confirmation. You'll notice there's this little doji candle there, and then we get a straight drop down to the zone below. Okay, the zone below is 2203. Now the zone above is 2208. So that's a 5-point drop. We also had a concierge trade alert that said to consider being short at 2204. And so if you sold 2204, the swing low was 2275. So there was a 4 and a, no, I'm sorry, the low was 2199.50. So there was a 4.5 point move. Now, we never get out at the exact swing high or the exact swing low because we trail our stop. If you are using a hard target, then it's possible you will get out at the swing high if it so happens that your hard target is placed at what turns out to be the swing high. Okay, price then made a move back up to the zone overhead, 2208/2209, and dropped in one 30-minute candle back to 2202. It then ran back up to 2208, and it came back down to 2203. Here we consolidated, here we were rejected, consolidated, rejected, and then this is what I call a hot knife through butter. Okay, what does that mean? It means price slices through as if the zone were not even there. However, when that happens, typically, price after it slices through will come back to that area, it will consolidate, and then it will continue on in the direction of the slice. So when it comes to the weekly trading zones, there's 3 things that can happen. The most common is consolidation. Second most common, rejection. And the third and the least likely is this slicing through as if it weren't there. However, each and every one of those leads to a trade setup. When you have consolidation, the market is simply making up its mind if it's going to go to the zone overhead or the zone below. It's going to attempt to do one or the other. Okay? Now, we first published the zones way back in 2009 on December the 14th. And so I guess that means that this year on December the 14th, 9 and 7, it'll be 7 years that we've published the weekly zones. You can go on Google and you can Google CFRN weekly trading zones, and you'll find a series of articles I've written over the years. if you click the Images tab at the top of the page, you'll be able to see charts. Now, not all the charts that come up will be ours, but you'll be able to easily pick ours out after you look at a few because of the way they're set up, the way they look, and the way price continually plays off zone to zone to zone to zone to zone to zone. Okay? Now, in one day, we traveled from zone to zone. And if I just go from the inside to the inside here, see, not counting any of the overshoot, from 08 down to 03, that's 5 points. So we got 5, 10, 15, 20, 25. 25 points in one trading day. Okay? That's pretty good for the S&P. Now, do all of our traders trade zone to zone? No. Some use the trade setup that we teach in the live trading room. And by the way, we only use one setup to trade the S&P, the Dow, the Russell, the NASDAQ. We don't actually trade corn or live cattle in the live trading room, but we could, because it's the same principle, the same concept. When we move from the crude chart to the gold chart to the S&P chart, we don't change the time frame, we don't change the indicators, and we absolutely do not change the strategy or the way we manage the risk in that trade. So when you come and learn how to trade with us, because you know you need an education, you may have tried to go it on your own already at some point, and that didn't end well, and you had to refuel the account. Okay? Another 5K to Chicago. You know, that pipeline, a lot of traders have only seen that pipeline work in one direction. From where you live to Chicago. It's actually a two-way street. There are people in the world who are consistently profitable in the market, and they actually get a paycheck every week. Their broker in Chicago sends them money. Imagine that. Yeah. But isn't that how any business should operate? I mean, if you go into business as a auto mechanic, or if you open a pizza parlor or a sandwich shop, whatever type of business you open, you expect it to be profitable. Different businesses have industry standard break-even points. Some of them are pretty brutal. The restaurant industry, for example, the typical restaurant, I'm talking about, not a sandwich shop, but I'm talking about a real full-blown restaurant, with the nice tables and the linen tablecloths and the waiters and the staff and all that. Okay? Break even comes at 6 years. 6 years to break even. Okay? Unfortunately, only 60% of restaurants survive the 6 years. Most traders don't survive in this business long enough to actually become consistently profitable. That's why we put so much focus in our mentoring program on aggressive risk management and one-on-one mentoring. Now, you may have spent money to get education from one of the big flashy firms who has a guy down on the floor of the exchange, and he's got his brightly colored jacket on. But let me ask you a question. Did you ever speak to him? Did he ever spend time with you? Did he ever sit down with you and help you critique your trades to understand that based upon the strategy you're being taught, where you should get long and where you should get short, and more importantly, why? Or were you simply chasing a blue dot or some red dot or green dot or whatever kind of dot it might be? And you never really understood why you were getting short or why you were getting long. They were just shouting it out and you were trying to chase it. And boy, that's a really frustrating way to try to trade, because they always nail it and you are always 2 steps behind and you get nailed, right? As everybody in the group is going along to follow the guru is using your buy orders to provide liquidity for his exit from the trade. So yeah, he did great, because he said, okay, I'm going to go long, and then he tells you, okay, I just went long at 22.02. So all of a sudden, nobody knows why we're going long at 22.02, but everybody's scrambling to get their mouse, get their DOM set up, everything okay, and now they go long 22.02. And when all these people go long, what does it do? It starts to push price up. Depends upon how big the following is. Pushes price up. Well, the guru only needs it to get to 22.04 if he's looking to take 2 points a day out of the S&P, as many people have been trying to do since the S&P began, which we do on a pretty regular basis, or $100 per contract. There's more opportunity in gold and crude each day than the S&P on a per trade basis. However, with the volatility that is inherent with crude and gold, the markets can be quite volatile sometimes. So you really got to be on your toes. Plus, the margins are higher; they're over $2,000. The S&P 500 is kind of like a slow boat to China, but the margin is only $500 per contract to trade, and there's enough volume and liquidity that you can trade that thing around the clock, except from Friday afternoon at 5 p.m. They shut her down. Open back up Sunday night at 6 p.m. That begins the Monday session on Sunday night. And at 5 p.m. on Monday, the market closes for 1 hour. Then it reopens at 6 p.m. Eastern, and that begins the Tuesday session. So the market's open all week except for an hour, Monday afternoon, Tuesday afternoon, Wednesday, Thursday, and then Friday it shuts down until Sunday night at 6 o'clock. Okay? So if you want to just trade the S&P, that's okay. You can certainly do that. You just have to have a little more patience. Now, during regular trading hours, you can take your 2 points for the day out of the S&P, often in a couple of minutes. If, on the other hand, you're trading the Asian session, it might take a couple of hours. Same trade setup, same indicators, same time frame, nothing ever changes. Why do we never change anything? Because if it's not broke, it's wise not to try and fix it. So that's what we do. We leave it alone. We've got the documentation. We've got everything for coming up on 4 years now. Now we're in our second decade of broadcast history as a Christian talk radio station. And we've been teaching traders how to trade since 2005. The first 3 to 4 years we did it as part of the radio show, but it grew to such a size that we decided we either had to scale it back because it didn't give us time to run our own trading business, or we had to actually turn the training aspect of our business into just that, a business. Our trading's a business. The educational side needs to be a business. Now, of course, people say, oh, the Christian Financial Radio Network. I guess they're trying to allude to the fact that God tells them when to buy and sell. Now, nothing could be further from the truth. Two Christians walk into a bar. One goes long, the S&P, the other goes short. Well, what a dilemma for the big guy, right? He says, which one do I show favor on? Let's see, now, maybe I'll do it on who tithes the most. Okay, this guy, he tithes a larger percentage of his income each week. But the other guy, his tithe is a higher dollar amount. Maybe I can't use that. Okay, how about who prays the most? All right. Well, this guy, he prays a lot, but all he's ever doing is asking for stuff. This guy over here, when he prays, which isn't as often as I'd like, because I like spending time with him, but he doesn't ask for much. He's just always telling me how thankful he is for what he has. So one spends a lot of time with me, the other not so much. Maybe I can't do it that way. Oh, who fasts the most? And he looks down and they're both a little pudgy like some people I know. And he goes, well, I can't use the fast test. So, what am I getting at? I'm getting at, that's not how God works, okay? Now, can he play a role in your trading business? Absolutely. He should play a role in every aspect of your life, every decision that you make. Now, I don't mean like you're pouring your coffee, God, should I put in 2 sugars or 3? You know? I mean, come on. Same thing with the individual trades. What he can help you with, though, is if you've prayed and you have confirmation from him and you just know in your heart that owning and operating a trading business is what he has for you. And that's how you're going to support yourself and your family, possibly your ministry, do good works, etc. Then move forward. If, however, after prayer and listening for the answer, sometimes it's a few minutes and sometimes it's a few days. But one way or another, he'll get the message through to you that, yes, this is how I want you to proceed, or no, I have other more important work for you to do. Okay? Not all people are called to be traders. Not all people are wired to be traders. Okay? Some of us don't have the psychological, emotional, physiological makeup for the business of trading. There's no way I would ever open a mechanic shop because, I can barely put gas in my car. I've changed a spark plug or two in my day, but, that's about it. So, I'm not going to go where I have no knowledge. Now, if I were a young man and I really loved cars and I really wanted to become a mechanic, then I would go to like the Institute of Automotive Technology and I would get a really good education. And then I would go and I would apprentice somewhere. I would get paid a small salary, and some, greasy old guy who can literally lay his hands on a car and heal it, he would grumble and growl at me all day and tell me to get him a wrench and get him a this and get him a that, and I would follow along and ask questions. And over time, I too would learn how to fix the automobile. See? Now, that's how trading needs to work. You may have signed up for some trading room who even has a guy that's like down on the exchange floor, and they've got brightly colored jackets and stuff. But did that guy, whose name, is up in lights, did he ever come and sit with you in a live trading room environment and help you actually learn the trade setup? I don't mean just, here's a blue dot, green dot, red dot, whatever kind of things, funny noise, crickets chirping, I don't know. But actually teach you how to trade. Aside from the live trading room environment, did he ever sit with you one-on-one and kind of take you by the hand and work with you, critique your trades, actually be in an environment where you could see his charts and then turn it around and he could see your charts and you could show him the trades that you made today, and maybe some got stopped out for a profit and some got stopped out for a full loss, and he's able to tell you, okay, here's what you missed, and he walks you through each one of the trades that you took that day, and you come away from the session enlightened. You have been in a what we call a mentoring session where someone who has years of experience with the markets has shared their knowledge with you. Now, can you figure it out on your own? Yeah, but that can take a whole lot of time and a whole lot of money. So, having a mentor, someone who will not only teach you in a group setting. Now, I'll just tell you how our 90-day mentoring program works. 2 hours a day, 5 days a week, for 3 months. We sit with you in the live trading room, and we trade, and we answer your questions, and then when the training room closes for the day, we take a 30-minute break, we go do 2 hours of live radio, and then we spend the afternoon doing one-on-one mentoring sessions. Okay? We have partners all around the globe, and so we use GoToMeeting to connect, because this way nobody has to run up an expensive phone bill, and you can actually see my chart, and I can actually see your chart. Modern technology is awesome. When I was trying to learn how to trade, I had traded equities for years on a whisper or on fundamentals. But when I came to futures, because I needed I needed something that wasn't rigged and gamed against me. I needed a level playing field. No market maker, no middleman, no CEO running off with the checkbook. I needed. When I heard there was 100% electronic market, not to be confused with options, because what you've heard about 85% of options expire worthless, that's true. They do. That doesn't happen with futures. We're currently trading the December contract in the S&P and the Dow and Russell and the NASDAQ and some of the currencies. We're coming up on rollover day, which means we're going to roll forward into the next contract, which is the March contract. Now, the way we teach is that you're flat at the closing bell every day. Now, if you want to reopen positions on the Globex session, you're more than welcome to, but it's important not to hold trades over from one session to the next, because if you do, you'll lose the day rate margin and you'll be subjected to the full margin, which means, like if you're trading the S&P, it's $500 per contract, unless you let the market close on you and you hold that order until the markets reopen at 6. When the markets reopen at 6, bang, you get hit with the full margin, which is $5,000. Now, if you don't have $5,000 in your account to cover that margin, guess what happens? They liquidate your trade. Okay, no big deal. They liquidate my trade. Yeah, but they also put you in the penalty box, which means you don't get to trade that session. Wait, I still got $4,000 in my account. Yeah, but you had a margin call, and so they want you to go through a cooling off period, etc., and not make any rash, decisions, because you are emotionally charged because you got snubbed out. Okay, so it's like, go sit in the corner and we'll see you tomorrow. or tonight at 6 when the market reopens. So anyway, back to, I want to just touch on this real quick. Our name, the Christian Financial Radio Network, okay? I already walked you through the whole story about two guys walk into a bar. But let me give you a little better explanation. I'm not going to explain it, but I'm going to tell you where you can read it. If you go to Seeking Alpha, they published an article I wrote. It's called God Chasers and E-Mini Traders. Back in the late 90s, early 2000s, there was a book written by a gentleman whose last name I think is Tenney. And he set out to prove whether or not this God thing was real. At the time, there was sort of a new revolution going on in the evangelical world of Christianity, and he wanted to ferret out the truth. And so he had some pretty amazing experiences on this journey. So if you're ever looking for a good book to read, that's a good book. God Chasers, okay? My book, not my book, but my article, God Chasers and E-Mini Traders, explains our business model, how it works, and how in the previous business that we owned, every day we would grind to a halt. We had 50 employees. They would all gather for what we called God's time. We would do a daily devotional, about 30 minutes. We did it on the clock because that's how strongly we felt about it. And then everybody would go back to work. Now, in the article, you'll read that our employees were felons, ex-felons, chronically homeless, people recovering from alcohol and drugs, basically the people that nobody else would hire. We gave them jobs. We helped them, and in many cases, helped them with a place to live, and helped them get back on their feet, some for the first time, because they grew up with dysfunctional parents, and so their whole life had been dysfunctional. They'd never had health care. They'd never had a steady paycheck. And so when I sold that business to my star employee, and I started the radio station, and then ultimately the educational arm of the Christian Talk radio station, I had to make a decision if I was going to keep the name Christian Financial Radio Network. See, first came the radio station. Then, after about 3 to 4 years of Michael and I training people for free every day during the radio show, it kind of became overwhelming. You know, there were so many people following us and asking questions and sending emails and asking for help that we realized that if we were going to continue, that we had to treat that as a business the same way we treat trading as a business, the same way as I treat the radio station as a business, okay? Now, all the financial greats from Rockefeller to Trump, in books that they've written, there's chapters about having multiple income streams. You never put all your eggs in one basket. And so, whatever you're doing right now, you need to, number one, get a primary income stream going, and maybe you already have that with your day job. And so, this business of learning to trade is going to be an additional revenue stream. There may come a day when that trading business becomes your primary revenue stream. But Michael and I, we're never going to tell you to quit your job. No way, Jose. Sorry, Jose. But that's not our place. That's a discussion between you, God, your spouse, and your accountant. Okay? All right. Now, many of our students, partners, clients are retired or just sold their business, and they may still be relatively young, and they're trying to decide, you know, what Act 2 of their life is going to look like. So if they come to us and want to learn the business of trading, if they want to be mentored, if they want to be an apprentice, okay, we teach them that. But we also make sure they understand the importance of developing a second stream of income. It might be flipping houses, it might be anything that excites you, okay? Because when you're making good money, whether it's at your day job or as a trader, and you have freedom of time, which perhaps you don't have with the day job, but you do have with trading, it opens up many doors and avenues for you to pursue things that you actually enjoy. 70% of the American population travels to work on a Monday morning filled with dread about the week ahead because they either hate their job, they hate their boss, or both, and life is just miserable. And so, do you want to live a life like that? I don't think so. I know I don't. Steve Jobs is credited with saying this, but I'm sure some old dude said it first, that if you find a job you love, you'll never work another day in your life. That's nice. See, to wake up in the morning excited about going to work, God, that's a wonderful thing. And to even get up early on Monday morning because you've been, 2 days without doing the thing you really enjoy doing, to go to, whether you walk down the hall to your office or get in the car and drive downtown, I've done both, to be filled with excitement about what's going to happen today, as opposed to, oh boy, oh, it's Monday again. You are the architect. Your thoughts become your words become your actions become your tomorrow. Okay? That's how it works. So be careful what you think, be really careful what you say, and then of course be careful what you do. All right? Now, we knew that when we rolled out what we had been doing for free as the educational training business, when we started charging people money for that, and we didn't know if people were going to pay money, honestly. Michael and I had a discussion, and we said, look, we'll roll it out. If people want to continue being trained and they're willing to pay for it, well, then we'll know that we have a business. We'll have a revenue stream doing something that we love to do anyway, so that'll be wonderful. If people don't want to pay for what we have to offer, okay, then we can focus on our own trading and just doing 2 hours of radio a day. And we don't have to field all the phone calls and all the training and stuff that we weren't getting paid for. The question then became, are we going to change the name of the trading company? Because some people are going to give you some heat because you're trying to, play the God card. And I decided, based on my previous business, where I had all these employees and the focus that we put on our daily devotional every day that lasted a half an hour, with my new business, I had clients, but I don't have employees. So I can't force a bunch of people to stop, I didn't have to force them. They wanted to. It was, it was nice to sit in the circle and talk for half an hour and share your feelings and maybe listen to someone deliver a message or a praise report, and actually be on the clock. So I never got too much blowback on that. We called it God's time. Now, on our radio show, if you follow the show, you know that we do pause for about 20 minutes each day on the radio show for what we call our good word for the day. 22 hours a day, we stream contemporary Christian content, primarily talk, sermons, teaching sessions from some of the contemporary people in the Christian world that I personally like, so I've hand curated what's played on the radio station. A lot of Max Lucado, a lot of Mark Driscoll, a lot of Matt Chandler, a lot of Andy Stanley. There's no Joel. You know, I know people have very mixed emotions about Joel. And I suppose I do too. And I'm not even going to get into that. I curated what I curated. And you could listen to the radio station for 58 days and never hear the same thing twice. And I'm constantly adding, new content as I listen to something and I'm moved by it. I curate it, okay? All right. So, made the decision, a bold decision, to leave the name the same. So, has it raised a few eyebrows over the years? Yeah. And so that's why I sat down one day and wrote the article, God Chasers and E-mini Traders. Go to seekingalpha.com. In the search box, type it in, and the article will pop right up. Take you about 10 minutes to read. It's no literary work, no Pulitzer Prize winner, but it explains who we are, what we do, what we believe, okay, and why we have the name we have. All right? Okay. So now we're over that hurdle. Back to the zones. We just showed in one day, Monday, of this week that we're on right now. Today's December the 3rd. The 27th was Monday. Yeah, because the 25th was Friday. No, the 27th was Sunday, and the 28th was Monday. There we go. And so on Monday, we had these 1, 2, 3, 4, 5 zone to zone to zone moves. Now, again, some traders just use the zones to trade. Others use our indicator set and our trading room strategy where we only use one trade setup. Not because we don't have others, but we want to simplify the learning process, okay? This is a business based on probabilities. It's not that we've stumbled onto the best trade setup in the world. It's just a simple trade setup that gives you a definable edge. And it's very simple to learn the rules. And once you learn to apply the rules and spot the setup and execute it and manage the risk properly, you'll find that reaching your daily goal, it's never easy, but it can be simple, okay? If you're a active partner, once you reach the end of your 90-day mentoring program, if you want to stay on board, still have access to all the stuff you have access to, like the zones, it's a minimal monthly fee. No big deal. Now, I will say that the indicator set, which I don't have displayed at the moment, at the end of the mentoring program, you own that for life. And so once the mentoring program is over, 90 days, you make a decision then if you want to remain in what we call active partner. And again, it's a very small, minimal fee. And that allows you to come to the trading room every day. You can still have unlimited mentoring sessions. You can still come to the Thursday night workshops. You still have access to the 1,000+ hours of video training that's in the members area of the website. Now, a lot of the training organizations out there, 90% of what they offer you in the form of training is watching videos. Now, like I said, we have 1,000+ hours of training and live trading videos, but really where the focus is that we teach you each day for 2 hours. You come to class every day for 2 hours in live markets. See, teaching with historical charts, I don't think I have to go into too much detail, but after the fact, with a historical chart, most anybody can look like a genius. So that's why we do what we do in live markets, because there's Photoshop and there's video editing software, but there's one thing you cannot fake, and that's a live chart. You've got your charting platform there and you're watching the numbers jump. If you don't have a platform, we loan you a platform during your free trial, which is what you do before you actually sign up for the mentoring program. And then you do have to get a platform. You have to have a charting platform. And so there's a couple that we have coded our indicators to work with. One's NinjaTrader, so a lot of folks already have that. If your broker clears through Gain Capital, our indicators will work with that platform, with their what they call white label platform. And if things go well here in the next week or two, our indicators will also function for you on multi-charts. So we're excited about that new door opening for us. Okay, and so these little S2204, that's sell 2204, turned into a 4.5 point trade. So one of our traders might have, if you're subscribed to the concierge trade alerts, you might have taken this trade. Or if you're just a partner and you're not subscribed to the concierge trade alerts, you might have just took the zone to zone trade. Okay. Now, our goal, if you're an S&P trader, is 2 points a day. That's $100 per contract. We believe the answer to the trading equation is not more points, but more contracts. However, number one, you got to go through a 10-day period in the simulator where you produce consistent results. You're consistently profitable to the tune of $100 a day in 10 trades or less. Let me say it again, 10 days in a row. Okay? Once you pass that test, our blueprint will give you the green light to go live and trade with one contract. Real money. Okay? Your next objective is to increase your account balance by $2,000. Then you get to add a second contract. Now, you may have blown up an account before. If you follow the rules, you won't blow up your account here. I mean, eventually you can if you just refuse to follow the rules, because what will happen is the blueprint, if you're not consistently profitable, it's going to put you back in the simulator. We're going to have mentoring sessions. We're going to troubleshoot. We're going to hook you up to the scope. We're going to figure out what part of the strategy haven't you got down, or maybe it's that you haven't learned to think in probabilities. We'll figure it out, whatever it is. We'll get you back on track. You'll regain your confidence in the simulator. We're not going to leave you to bleed out on the trading floor. That's insane. We'll grab you by the pants leg and pull you back in if we have to. When it's time to go live, you step right back out where you left off. If you've worked your way up to 3 contracts when you hit a rough patch, okay, get you into sim, do some more training, and get you back out there and get you profitable again. Okay. Now, after the second contract, we go on a calendar-based method. And what that means is, at a predetermined time, if nothing's gone wrong, you'll add a third contract. And then at a predetermined time, you'll add a fourth contract. The blueprint is called the 2420 blueprint. It's designed to take you from 1 to 20 contracts over a period of 24 months. Now, it is quite possible to be at the 4 contract level in the first 6 months. You may not be there, but it's certainly possible. If you reach the 4 contract level, we're talking $100 per contract per day. But now you've earned your way up to 4 contracts. Every contract you added was underwritten by profit you earned in the market. not money from the IRA or the 401k or the wife's cookie jar or Aunt Ida. You earn the money in the market. When you're trading with money you earned in the market, you set your posture changes, both mentally and physically. And you'll see what I mean over time. So at 4 contracts, you're now grossing $400 a day instead of $100 a day. On a 5-day week, that's a $2,000 gross before commissions. All right. Now, that's if you take 2 weeks vacation every year, that leaves you with 50 weeks. That's $100,000 a year gross before commissions and before taxes. Okay? It is absolutely not a get-rich-quick scheme. However, the average doctor in America makes less than $250,000. Not every doctor, okay, is a plastic surgeon in Beverly Hills. While doctors, when you look at your doctor's bill, you go, my God, that guy's really getting rich. Well, you haven't seen his malpractice insurance premiums or his payroll for his employees or the cost of renting his office. I mean, it's not like he gets to pocket everything you pay him. Got a lot of overhead. Plus, he's got all those student loans to pay off. See, you pay for your education with us up front. Now, I'll go ahead and warn you, PayPal, they're going to offer you when you check out, because we're blessed to be in good standing with PayPal, they're going to offer you a deal that says, hey, did you know that you could make this purchase with no payments and no interest for 6 months? And you're going, wow, I didn't know that. But now you do, because I just told you. Okay? I absolutely am against you going in debt to learn how to trade. Okay? Now, if you have an income, or if you already have the money set aside in an account, because this is the money that you're going to use to build your trading business with, there's nothing wrong with taking them up on the offer. If you know that you are going to make a payment every month for the next 6 months, that's exactly 1/6 of the total amount that you're paying for your education. So that when the 6 months are up, you're completely paid off and you have not had to pay a penny of interest. Now, that's what guys like Warren Buffett and Donald Trump do all day long. They use other people's money. But they typically have to pay interest for using other people's money. That's why this deal with PayPal, if you're in a position to take advantage of it, is so sweet, because you get to use other people's money for free. Warren and Donald would be tripping all over each other trying to get to that kind of a deal. Okay? It's not a typical deal. Now, let's face it. They're gambling that you won't make a payment every 6 months, and that when the 6 months are up, you're going to owe them the full amount, and they're going to tack on the interest for the last 6 months, and you're going to be paying them a lot of money for a while. Okay? So, as tempting as it may be, do not take that offer unless you absolutely 100% know that you have enough income to make that monthly payment so that you don't end up owing interest, or that you already have the money in savings, so it's just a matter of making the payment out of your savings. I mean, hey, your money's still sitting in your bank drawing interest. I understand you don't get a lot of interest on your money these days, but better that you get the 0.5% in your account than PayPal getting the 0.5% in their account, right? So, give it good thought before you make your decision. Okay, let's keep rolling. All right, now we're up to Tuesday. Okay? The concierge trade alert that we emailed out Monday night said to buy 2204. It ran up to 2206. Bing, 2 points for the day. Okay? What it failed to do on this move was to get up to the zone overhead. Okay? Sometimes that happens. Zones are an area. Okay? Now, on the way back down, we overshot the zone, but we were expecting support to be right here. Why? Look left. Look left. Every time price gets down to this area, buyers step in and run it back up. Why? Because for a buyer, that's a low-risk trade. They only have to risk just a couple points to potentially pick up, in this case, 10 points, roughly. So if buyers and algorithms were willing to kick in and buy at this place, at this price, I should bring that up. According to the statistics, 70% of orders placed on the New York Stock Exchange each day are generated by a mathematical algorithm. Okay. Who uses these algorithms? Hedge funds, institutions, banks, what they call the big boys or the big money. Okay? And so if the algorithm kicked in at this area and sent prices higher, and then the algorithm kicked in some other algorithm, that's being used by enough traders, created enough selling pressure to send it back down. Now, here's what will happen. Traders who are actually, remember, we're talking about 70% is done by the machine, 30% is actually done by just ordinary people like you and I. We know that the machine favored this area, and so we step in early. Plus, as a CFRN partner, you also know that it's a weekly trading zone, and so there's a good possibility that it's going to act as good support, like it did here, like it did here. Sends it back up to the zone. But why doesn't price go all the way up? Because sellers step in early, because they want to take the joyride down just like the buyers took the joyride up. Now, you've ever been up on the Empire State Building and dropped a penny off, you could hurt somebody and shouldn't do that. In fact, there's signs, don't be throwing stuff over the edge. But my point is, the market falls faster than it climbs. It's just the nature of the market, okay? People have to make a financial commitment for the market to move higher. But for the market to move lower, people just have to simply stop buying. And the market will slowly deteriorate, okay? So, price comes back down to an area where we expect buyers to step in, because they stepped in here and they stepped in here and now they step in again, and this thing goes from roughly 2198 up to 2208. Actually, it went to 09, so it's like an 11-point move. Okay, and then what does price do? It comes back down to the zone. Okay, we consolidate. Look at the time down at the bottom where it's red. It's the Asian session. That's the sleepy session. Okay, each one of those candles is a half an hour. We get it right inside of the zone, and then 1 o'clock we start approaching the London Open, which is at 3 a.m. Eastern, 12 p.m. Pacific. If you're on the West Coast, you should really consider staying up late one night and trading the London Open. Trade the S&P 500, gold, crude, and the euro have plenty of volume, volatility, and participation. These are all things that you need to get your goal for the day. And so if you live on the West Coast, you can stay up till midnight, get your points for the day, maybe in the first hour. Maybe it takes you 2 hours. Sometimes it happens on the first trade. That's a hurdle you have to overcome psychologically every day. Because with most jobs, once you clock in, you're going to be there for 8 hours, and then you're going to clock out, and then you're going to go home. When you come and sit down to trade each day, you don't know how long you're going to be there, because you have a goal that you've established. A point goal, dollar goal, whatever makes you feel more comfortable. And so you are going to put on and take off trades until you reach the goal. Once you reach the goal for the day, you're going to put the mouse away. That's part of the mentoring program, teaching you the discipline to put the mouse away. And how many times have you made some nice money and then turn right around and the market grabbed that sack of money and pulled it back over to its side of the desk? You can play that push me, pull you game all day long, and it's really freaky how at closing time, when the music stops, a sack of money is almost always on the other side of the desk. Like, how did he do that? So I figured out, after a few painful experiences, like making $5,000 in 15 minutes, and then, making big plans for a $20,000 day, and then on that very same day, I left the office when the markets closed with my head hung low like a hound dog. And I get home, my wife's like, "What's wrong? I've never seen that look on your face before." And I said, "I've never felt this way before." I went to my office, I sat, I thought about it. I was like, man, I made $5,000 in 15 minutes trading the Russell. How in the world did I manage to end up losing money today? So I tried a few ways to make sure that never happened again. I only found one way that worked consistently, and that was once I reached my goal, I stopped. Yeah, I don't know if you're a poker player. I'm not, but I've seen it in the movies. Guys are playing poker. Some guy has a big winning hand. He rakes in, the pot, and he gets up and starts to walk off. And everybody's like, "Hey, you get back here, man. You got to give us a chance to win our money back." And he's like, "No, I don't." And so they either shoot him in the back or they let him walk out with his money. The market is a gentleman, and so it's not the enemy. Sometimes traders will get that in their mind that they've got to beat the market, they got to smash it, they got to crush it. Stop that. It's too big. You can't beat it, crush it, smash it. Okay? What you can do is respect it, look at it as a senior partner, and just figure out, based upon how people think and react to certain situations, and understand how the underlying rhythm of the market works. And then all you have to do is get in sync with the market for just a couple steps on its daily journey, and you've got your goal for the day, and you can be on your way, embracing life, doing the thing that you're truly passionate about. You become a trader because you want to make a good income, and you also want to have time to do what really matters. Okay? If what really matters to you is staring at these screens all day, you've got to get a life. Go talk to God. He created you for something other than that. I just know it. And if you ask him, okay, you got to sit there and listen. You probably won't hear the voice of Charlton Heston, but you might feel a stirring in your heart. And then over the coming days, as you are saying your prayers of thankfulness and gratitude and all that, something's going to happen, something's going to change. You're going to meet someone, some kind of door is going to open, an opportunity is going to present itself, and you're going to unmistakably know that's God answering your prayer when you ask Him, what did you create me for? How can I best serve you and my fellow man? See, when He knows, when you make the vessel ready, He's not going to pour your life's purpose into a slop jar, okay? So you got to make the vessel ready, and He will pour in your purpose for your life. And then it's on you to carry out the plan. So again, trading is a means to an end, not an end unto itself. Okay? It allows us to earn a good income and have a lot of time to do the thing we were created for. So the same thing just keeps happening over the course of the week. Price goes up and hits the zone, and as often will happen, it gets rejected a little bit, leg, retrace, and then another leg. See how we consolidate, and then we make the break, and up we go. This is a pretty small zone. Sometimes new people will say, hey man, why'd you put the zones so close together this week? Gosh, I hardly got room to turn around. It's like, I wish I had the power to actually do that, but I don't. All I can do is use my proprietary formula to do what I do, and have been doing since December 14th of 2009. And actually, that was the first day we published the zones to our partners. It was something that I had worked on for quite some time, and Michael and I, in private, had been trading the numbers. And so we began to share them with the partners. It's not part of what you pay for when you enter the mentoring program. It's our weekly gift to you, because it really does make the week a little simpler to deal with if you have a good idea of where price is going to go ahead of time. Okay? So on the trip back down, again, here we went from 08 back to 05. Well, here we went from 03 to 08, that's 5, and then we went another 3, and on the way back down, we didn't quite make it to the zone, went back up, made it a little further down, back up, made it all the way down. Okay? Now, you don't have to get chopped to pieces on that. Once price gets below the zone, you simply have to establish your hard stop. We never trade without a hard stop, where the chart tells you to. Now, on our daily double product, I actually tell you where to put the stop. But with the concierge trade alerts and the one trade a day, I teach you how to read the chart so that you know where to put the stop based on what the market, what the chart itself is telling you. I don't want to go too deep into that because we've already gone far longer than I had planned. And so price comes down, and you see how we tested this area a couple times, then we came here, we tested it again, and it ran back up. This time it made it a little bit further, okay? Because traders, after a while, they start to think, man, I'm going to see if I can't get the best possible price. And so they let it come a little bit lower, and then they buy it, and bang, right up to the zone. A nice little shooting star right at the zone, and then boom, over. Well, you could have traded a couple different ways. From 02 down to 94, that's 8 points. You could, if you're trailing your stop, you might have got stopped out with 5 or 6 points. Man, that's a day. Put the mouse away. But if you put your stop above the zone You may have let it go all the way to the zone from 02 down to 93. So that's 93 and was it 9 points? Okay. And so leg, retrace, leg, okay. Now, make sense? Price comes back to the zone, consolidates. There's a couple of points there from 95 to 97 and a quarter. Here we were selling 21.96. This was sent out to the concierge trade alert clients, and there was a 8 3/4 point per contract available. And we were closing the radio show right here, and I said, guys, here's what I think's probably going to happen. I think price is going to climb back up to the zone, confirm that it will serve as good resistance, because that's a thing we see repeated again and again and again and again, especially because what this do, it sliced through. Okay, so sure enough, after I signed off, what I did before I signed off was I drew this little trend line, and I explained to the audience, and you can go back and listen to the show for December 1st, and it will be right at the very end of the show where I do this, and you can see how I explained it live in real time. Just go to emini.cfrn.net. emini.cfrn.net. Okay? All right. I said, I think price will come back up, find good resistance, and then we'll get a nice move to the downside. We might go down to this weekly trading zone. And do I have my little sheet in front of me for the 22nd? Yeah, I do. This was the lowest weekly trading zone for the week. So we didn't quite make it. Okay, but we did do the thing that I thought would happen, and so when price started its move down from 92, it got all the way down to 84, so that's 8 points. Okay, then it goes back to the zone, overshoots a little bit, consolidates, drops down, and look at where it drops. Okay, this is a reverse head and shoulders. We're not pattern traders, but we understand patterns. We speak candlestick. If you go to this Google The Secret Life of Candles, a little slideshow I did that walks you through the basic. There's like 200 different candlestick signals. Now, this is nothing new. The candlestick trading was used by rice traders 400 years ago. So it's not the newest thing to come down the pipe. This has been around for a long, long time. Pattern recognition got its start in the early 1900s. But now you have to use a little bit of imagination. But here's a shoulder. Now this is a reverse head and shoulders. This is like a guy standing on his head. Okay. Shoulder, head, shoulder. Let's see, his feet would be way up here in the air. He's standing on his head. Shoulder, head, shoulder. Now, what conventional wisdom says is that once the right shoulder is formed, then you go look for the neckline. Okay. Now, some people will draw the neckline like straight across here. Other people will do this. I don't even go into it. There's your neckline right there. So Sunday night on the Globex Open, if we open 21.95, or if we may gap open to 21.95, but if we simply open and start moving to 21.95, then let me just go ahead and throw out a trade right now. Consider being long from 21.96 to 22.02. And a nice 6-point S&P trade to jumpstart your week. Okay? Once again, if you're so inclined, Sunday night on the Globex Open, consider buying 21.96 with a target of 22.02. Where would you put your stop? Well, 21.96 to 02, that's a 6-point move. And so I'd give it about 3 points. Yeah, put it back down here. Just put your stop loss at 21.93. Enter the trade at 96 and look for a target at 02. Now, once this thing gets up to 98 or so, 99, I'd be bringing that stop to break even. Okay? Well, what if it comes back and stops me out? Well, that happens. Okay? Now, some people believe in once you assume the risk, you should stay with it. And I support that too. You just have to decide which one is best for you, because we all have different personality profiles. All right? We have different risk profiles and different personality profiles. And so when you enter this trade, you are risking $150 per contract because you've got a 3-point stop loss. And so as it starts to move higher, it would be a shame to see it get to 2200, and because you moved your stop to break even, come back, go leg, retrace, complete the leg, and you're like, oh man. So think about ahead of time how you're going to deal with it. You don't want to make those types of decisions in the heat of battle. Either I'm going to assume the $150 risk, which means I will either make 6 points on the trade, which is $300 per contract, or I will lose $150, which is 3 points. Okay? So you're risking 3 to make 6. Now, here's what I would do, okay? This thing starts getting up here around 2200, 2201. Sometimes price won't quite make it to the zone. It might come up a couple ticks short. And so I would manually grab my stop loss on the DOM. And when that thing gets within striking distance, I want to be right behind it, okay? Because I may not, it might dip back and take me out and then go do the 22. But if I'm able to pick up 4 points out of that trade, I risked 3. But if I can end up with, I still want my 6, but at this point, I'm going to make sure I don't get less than 4, okay? That's a smart way of doing it too. Because if you're trading the 24/20 blueprint, your goal for the day is 2 points. And so if in this one move you're able to you got 2 days worth of work under your belt. All right. That in different markets we had a lot of good activity this week. I won't be able to go through everything with you. On Friday, on the NASDAQ, we had sent out the alert to sell 47.29, and it provided 20 points per contract. That's what was available. But because we trail our stop, as it starts to move back up, you're going to get stopped out with some portion of $400. $200, $300, whatever it is. Depends on how closely you trail your stop. And then here it ran up 15 points. But we had a number of really good days. I think on that day, did I not have a chance to mark it? Oh, I did. If you bought 48.80, you got 5.5 points. Then if you bought it again, you got stopped out. And then if you sold 48.65, right here was $1,000 per contract. Okay. Now, concierge trade alerts are valid until they come out again the following night. So you could have been trailing your stop, and that 1,000 became a whale of a lot of money. Okay. And we had a couple good days in bonds. Friday we had $1,000 per contract move in bonds from here to here by 149.28, $1,000. Okay. Gold, unfortunately, we had some good moves, but we were to the downside by and large. Here's an example of one and done. This vertical line represents when the email went out with the alerts in it. And so if you set up your DOM to go long at 1178, the first 30-minute trigger, $180 per contract was available. Now your goal is $100 per contract per day. So even if you were trading 10 contracts, your goal is still $100 per contract. If you're trading 10 contracts, then that's going to make you $1,000 instead of $100. Now, a question that often comes up, well, yeah, but is there enough volume to support that? Well, let's see. On that candle right there, there was 5,223 contracts traded. 5,223. So my answer is, yeah, there probably was more than enough volume. Here's another awesome gold trade. We told our subscribers to sell 1192, and here, right here, if I put our indicators on, I'm going to do this, and then I'm going to stop this video for today, because you need to go spend time with your family. 20 points at $100 a point is $2,000 per contract. Right here is $1,500 per contract. Now, why would somebody get out right there? I'll show you. Insert indicators. This is the same indicator that we use in the live trading room. Exact same. You can put it on any time frame. We use it on a range chart in the morning in the live trading room for a whole host of reasons that I'll be happy to explain to you Monday morning if you take our trial. By the way, if you want to take the trial, it couldn't be simpler. apply.cfrn.net. Okay? apply.cfrn.net. All right. Now, when this little black line here, it's called the step line. When it gets on the back side of the MA1, this is this red and blue line here, okay? And you have a candle close above the step line in the opposite direction of your trade. Remember, this is a short trade, okay? And so it tells you that you exit at the close of this candle, which is 1176.40. Which I rounded up to 1177 to be conservative, and so that's $1,500 per contract. So see, our indicator set told you exactly where to exit. take away the indicator set. Our indicators are like fancy reading glasses, okay? They're not magical. It's not some ancient secret that we found in an urn in the mountains in some cave somewhere. It simply provides you with a high probability setup, a definable edge. And once you learn to apply that definable edge, whenever it presents itself, you then begin to think in probabilities. And that's really what this business is all about, okay? It's not about who can run the fastest or jump the highest or lift the most weight. It's about who can think in probabilities and use that knowledge to take action at the appropriate time in a controlled and non-emotional manner. And, that's a pretty nice day. All right? Now, let's say you got triggered in on, let's say you triggered on this candle here. Okay. 1,160 contracts were traded in that 30-minute period. So could you have come in here with 10 contracts? Yep. And on the exit candle, there was 5,343 contracts traded. So could you have got in and got out with 10 contracts? Yep. Would that really be $15,000? Well, it would be. Now, this is a historical chart. Anyone can look like a genius. I said that at the beginning. So that's why I encourage you to come and watch live. If you take the trial for the Concierge Trade Alert, you also get to come in the live trading room. You also get to use the indicators for an entire week. If you want to know how to take the trial, you go to this little place right here. This little shack on the net overlooking the ocean. emini.cfrn.net. Okay. There will be a baseball player, and if you click the three little dots below the baseball player, the post will open up, and it gives you the link that you click to take the trial. Now, if you take the Concierge Trade Alert trial, you don't have to take the trading room trial as well, because the Concierge Trade Alert trial includes the trading room trial. Why? Because if you become a Concierge Trade Alert client, you will also have access to the trading room, the indicators, the workshops, the mentoring sessions, all the stuff that I talked about earlier. So if you have any questions over the weekend, feel free to email us, support@cfrn.net, support@cfrn.net, or you could call us. You'll probably get voicemail. If you leave a message, we'll call you back. If you call 10 times repeatedly and get aggravated because you can't get anybody on the phone on a Saturday, we probably won't call you back. But if you call just once and leave a message, I promise you, somebody will call you back. Either me or Michael. One of the two of us. Okay? Michael or I. Okay. That's going to wrap it up for me. I hope to see you all. If you watch this video over the weekend, and you've tried and you're just, man, you know deep down inside that this is what you are supposed to be doing, but you just can't seem to figure out the right way to do it. Nobody will apprentice you. Nobody will give you the mentoring that you need. Well, by golly, now you got it. Okay? Support@cfrn.net, 94942 emini. And also, here, you can watch recaps of previous radio shows. Every radio show for the last couple years has been uploaded here. And so you can just scroll down the page and You may not want to listen to the whole show. Maybe you do. Maybe you just want to see the part where I recap the alerts, or you might want to see the part where Michael recaps the live trading room. It's your weekend. It's your internet. So please have fun. Take care. God bless. I'll see you all in church tomorrow, and I'll see you Monday morning in the live trading room. This is Dwayne from CFRN. Take care.